Dear 12th class economics students, Assalamu alaikum. Dear students, there are three important aspects of national income. One is the production aspect, which points to flow of goods and services in the economy, or we can say the process of value adding. Second aspect is the income or distribution aspect, which points to the generation or distribution of income among production factors in terms of wages, rents, interests, and profits. And third one is the expenditure aspect, which indicates the disposal or expenditure of income in terms of consumption expenditure, investment expenditure, government expenditure, etc. On the basis of these three aspects of national income, there are three important methods of measuring national income. First method is the value added method, which is also known as product method. Second is the income method, and third one is the expenditure method. In today's lecture, we will discuss the value added method of measuring national income. Dear students, value added method is also called the output method or product method of measuring national income. This method involves estimation of the market value of final goods and services produced in an economy in a given period. Under this method, the economy is classified into different sectors like agricultural sector, industrial sector, service sector, and foreign transaction sector. Then the net value added by each sector as well as by each productive enterprise is estimated to arrive at national income. When we count the value added by each and every productive enterprise and then take the sum total of all these value added, it gives us the estimation of national income without double counting. Students, double counting means consideration of certain items more than once, which eventually leads to overestimation of national income. In order to avoid double counting, value added at each stage of production should be calculated to arrive at national income. What is value added? Dear students, value added is the difference between the value of output and input at each stage of the production. So, in order to calculate national income by means of value added method, the value of inputs, that is the value of intermediate goods, should be excluded, or we can say it should be deducted from the value of final output. In other words, we can say that only the value of final goods and services is included in national income by using the value added method or the product method. So, dear students, product method or value added method is that method which measures national income by estimating the contribution of each producing enterprise to production in the domestic territory of a country in an accounting year, which is generally taken as 1 year. This method can be better explained with the help of an example given in this slide. This example involves the production of bread, which passes through 3 different stages. First, the farmer produces the wheat and sell it to the flour mill. Second, the flour miller turns the wheat into flour and sell it to the baker. And third, the baker makes bread and sell it to the final customer. In this table, it is assumed that The production of wheat involves the cost of intermediate consumption of rupees 200, such as the cost of seeds, the cost of fertilizers, etc. Accordingly, value added by the farmer is equal to the value of wheat, which is rupees 600, minus the value of intermediate consumption, that is the value of seeds or fertilizers, which is rupees 200. So, value added by the farmer is rupees 600 minus rupees 200, which is equal to rupees 400. After that, the flour miller buys wheat from the farmer for rupees 600. For miller, wheat is an intermediate good. Flour miller converts wheat into flour and sells flour to the baker for rupees 800. Value added by the flour mill is therefore equal to rupees 800 minus rupees 600, which is equal to rupees 200. For baker, flour is an intermediate good. Baker manufactures bread from flour and sells the entire bread to the shopkeeper for rupees 1000. The value added by the baker is thus equal to rupees 1000, which is the value of bread, minus rupees 800, which is the value of flour, that is intermediate consumption. Thus, rupees 1000 minus rupees 800, which is equal to rupees 200, is the value added by the baker. The shopkeeper then sells the bread to the final consumer for rupees 1200. Thus, the value added by the shopkeeper is rupees 1200 minus rupees 1000, which is equal to rupees 200. Dear students, in the given example, wheat is a final product for farmer, flour is a final product for flour miller, and bread is final product for baker, as every producer treats his commodity as the final output. In this way, total value of output is thus equal to rupees 600 plus rupees 800 plus rupees 1000 plus rupees 1200, which is equal to rupees 3600. However, after carefully examining the situation, it is revealed that each transaction contains the value of intermediate goods, such as the value of wheat is included in the value of flour, the value of flour is included in the value of bread, and so on. As a result, the value of wheat and flour are counted more than once, which causes the problem of double counting, and it leads to overestimation of the value of goods and services produced, as has happened in case of our example. So, in order to avoid double counting, we consider only the sum total of the value added by each producing unit to estimate the value of national income. In case of our example, value added by the farmer is rupees 400, value added by the flour miller is rupees 200, value added by the baker is rupees 200, and value added by the shopkeeper is again rupees 200. Thus, the gross value added by all the producing enterprise is rupees 400 plus rupees 200 plus rupees 200 plus rupees 200, which is equal to rupees 1000. So, the total of rupees 1000 should be included in the calculation of national income. Students, we know that gross value added by all producing enterprises within the domestic territory of a country during the period of 1 year is called gross domestic product at market price. So rupees 1000 is thus the gross domestic product at market price. Let us now take the economy as a whole. Students, gross domestic product at market price in an economy by using the value added method is equal to the gross value added by all the sectors of the economy. That is gross value added by the primary sector, by secondary sector, and by tertiary sector. So under the value added method, gross domestic product at market price is equal to the sum of gross value added in primary sector plus gross value added in the secondary sector plus the gross value added in the tertiary sector. The deduction of depreciation from gross domestic product at market price will give us the net domestic product at market price, and the deduction of net indirect taxes, that is indirect taxes minus subsidies, from net domestic product at market price will give us net domestic product at factor cost, and finally the addition of net factor income from abroad to the net domestic product at factor cost provides us the estimate of net national product at factor cost, which is the estimate of national income. So this is the whole procedure of estimating national income by using the value added method, or we can say the productive method. Dear students, while measuring the national income by using the value added method, certain precautions should be taken into account, such as sale and purchase of second-hand goods is not included in the value of output because the value of second-hand goods had already been included in the financial year in which they were produced, and they are not counted as a part of current flow of goods and services. However, any brokerage fee or commission paid on any sale or purchase of second-hand goods ought to be included in the calculation of national income because this is a new service rendered in current year. On account production of goods, or we can say the value of production for self-consumption, is taken into account while measuring national income because they contribute to the output of a current financial year. They are simply not sold owing to their need by producers themselves. Furthermore, value of intermediate goods must not be added in the national income because this will amount to double counting, as the value of intermediate goods is already reflected in value of final goods. Moreover, imputed rent value of self-occupied house should be included in the estimate of national income. The reason being, owners who live in their own houses are enjoying similar housing services like people who live in rented places. So, the value of such services is estimated as per the market rate. Dear students, services for self-consumption, like services of a housewife, such services are not to be included in the estimates of national income, as it is not easy to find out correctly the value of such services. However, paid services like the services of maids, drivers, etc., such services should be mentioned in the calculation of national income. Thank you.